Alright, hi everyone. Welcome to today's webinar brought to you by IC Markets. I trust you've all had a great weekend. Right, and let's get ready to start the new trading week. Alright, before we start, let's take a quick look at the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, please take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital and should only trade with money you can afford to lose. Right, so here's the agenda for today. Right, of course, we'll start off with looking at the economic calendar for Forex Factory for this week. Let's identify some of the key events to watch out for, and then we'll start the analysis on the majors, and of course look forward to all your custom requests as well. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Right, so here's the calendar from Forex Factory. Take note, I'm on GMT time here. So you can see it's a pretty heavy calendar. We've got two central bank meetings as well. We've got the Bank of Canada on Wednesday, 5th of June, where they are expected to cut their overnight rate from 5% to 4.75%. So they're going to cut it by, or they're expected to cut it by 25 basis points or a quarter of a percentage point. Now, with should the Bank of Canada actually follow through with this rate cut here, it's quite likely to have a near-term impact on the loonie. So the Canadian dollar is quite likely to lose its value on this day itself, which could provide, or rather this action by the central bank could function as a potential bullish catalyst for the dollar CAD. We've also got ISM data out of America for manufacturing and services PMI. We've got Australian GDP, Swiss inflation data. We've also got the ECB lined up on Thursday, 6th of June, where they are also expected to cut their main refinancing rate from 4.5% to 4.25%. And of course, we've got non-farm payrolls as well. So it's quite a heavy calendar for this week. All right. Hi, Charlie. Good to see you. All right. Thanks, everyone, for tuning in. All right. Okay. Just taking a quick look at where the main refinancing rate sits at in the euro area. Right. It's been held at 4.5% for the fifth consecutive time. Right. At the previous meeting. Right. So inflation has until last Friday, right? Last Friday with CPI data out of the euro area as well, right? So prior to that release of the data, inflation had been trending lower quite significantly, right? We saw headline CPI and core CPI decelerate in the euro area. However, the flash CPI data for the month of May has shown a re-acceleration, right? So on the left, I have the chart for headline CPI, and on the right I have the chart for core CPI, both on an annualized basis. So as you can see here, for the flash reading for the month of May, we saw headline CPI accelerate from 2.4% to 2.6%. This was above the forecast of 2.5%, right? Prices rebounded for energy, services as well. And then when you look at it, break it down into the individual countries such as Germany, France, Spain and Italy also experience higher than anticipated acceleration as well. When you look at the core reading, this too increased from 2.7% in April to 2.9% and also above the forecast of 2.8%. Now, with Forex Factory highlighting a potential rate cut by the ECB, but because we see that there's a potential acceleration in inflation, maybe it might be enough for the ECB to keep rates at 4.5% once more. So take note, although markets seem to be forecasting a cut by the ECB at this week's meeting. However, looking at how the flash CPI data came in last week, right, Friday, with flash CPI data for the euro area, we see re-acceleration for both headline and core CPI. This may be enough for the ECB to keep rates on hold once again, right? And also when you look at the Euro area GDP, after falling into technical recession in the third and fourth quarter of last year, right, the second half of 2023, we saw the Euro experience technical recession. That means when they have two consecutive quarters of negative growth. However, when you look at the data for Q1 of this year, it has rebounded quite strongly. So perhaps this rebound in GDP output, along with this acceleration in headline and CPI and core CPI, may be enough for the ECB to maintain their rate at 4.5%. Remember, market forecast currently seems to indicate a cut, but maybe because we've seen this re-acceleration in CPI and also this rebound in economic activity, perhaps they may not cut at this week's meeting. Alright, morning Rand, morning Roy. Rest, of course, we'll cover the pound, the Aussie, gold, silver as well. Alright, great. So, but of course, as you know, guys, so we'll start off the analysis with the on the dollar index, and then we'll work our way down through those major currency pairs and gold and silver as well. Alright, great to see the request come in early. Alright, good stuff. Alright, then moving on to the US, we've got labor market data, right? Specifically, we've got the ADP data and non-farm payrolls, right? Both are likely to be, both are definitely going to be market moving, especially for the non-farm payrolls as well. Now, starting with ADP, ADP is going to be released on June 5th, 12:15 p.m. GMT time. Previous reading was 192, right? That came in for the month of April, and that was also higher than the forecast of 175,000, right? And then this week's for the month of May, the forecast looks to show job gains of 175,000, right? So overall, when you look out over the last 12 months, job gains have been quite steady, right? Quite steady, but it's starting to the rate of job growth is starting to slow down when you compare it to the 12-month average. So looking at it from last May, the 12-month average for ADP unemployment change has been coming in about almost 200,000 jobs per month, and you can see now with last week's reading at 192 and this forecast for May at 175, jobs are still continuing to be added to the US economy or the US labor market. However, the rate is starting to slow down as well, right? So take note. So should we see a miss in ADP numbers on Wednesday, this could function. This is quite likely going to function as a near-term bearish catalyst for the US dollar, right? And of course, if you see a stronger than anticipated reading, right, coming in higher than 175,000, perhaps 180, 185,000, then of course this is quite likely going to function as a bearish catalyst for the dollar. Now, looking at non-farm payrolls, on the left I have the chart for non-farm payrolls or NFPs, and on the right I have the chart for unemployment rate. So looking at NFPs, when we look at last month's data, right, for the month of April, the US economy added about 175,000 jobs versus the estimate of 243,000. So there was a miss in NFP numbers last week, right? There's a miss in NFP's numbers last week. However, we saw the data for March being revised upwards to 315,000. So it's a slightly mixed data for the month of April, right? April, we saw less than anticipated jobs being added. However, the previous month for March had its number revised higher as well. Now, when you look at the monthly average, right, the 12-month monthly average for non-farm payrolls, it's been coming in at about 242,000. And when you look at the latest current readings, you can see that April's reading fell well short below the average, right? So if we do see data continuing to come in lower than the average 12-month average, right, of course jobs are still being added to the economy, but you can see the rate of change has started to slow down as well, right? And we see the forecast coming in at 185,000, compare that to the 12-month average of 242. You can see this is quite a big difference in the monthly change. So we can see that the rate of job growth in the US is probably going to slow in the coming months. That's not to say we're going to see job losses, right? We are still likely to see job gains for the next couple of months, next few months, but it's going to be at a slightly lower rate. Now, looking at the unemployment rate, it is expected to remain unchanged, right? As you can see here, for most parts of 2022 to 2023, all right, we can't see 2022, but basically between 2022 to present time, the unemployment rate has averaged between about 3.4 to 3.7%, right? This let me get my pen. There's a 3.4 4% is around here, 3.7% here, right? We've seen unemployment rate like sort of range between 3.4 and 3.7% for most part of 2022 and 2023. However, this year we've seen it break above 3.8 and hit 3.9 as well, right? So it is expected to for the month of May, and unemployment rate is expected to remain at 3.9%. So we can see a slight uptick in the unemployment rate as well, right? Remember that the range for 2022 to 2023 was between 3.4 and 3.7%. However, now we've seen it break above 3.8%. It's likely to hover around 3.9 and 4% over the next couple of months. Now, if we see a strong set of data for non-farm payrolls, that means we see NFP coming in higher than 185,000, while the unemployment rate still remains unchanged at 3.9%. And if it does edge lower down to 3.8%, that's very likely going to function as a strong bullish catalyst for the dollar index. Now, conversely, right, if you see a weak NFP number, such as non-farm payrolls coming in less than 185,000, while the unemployment rate edges higher again to maybe, for example, 4%, then of course this is quite likely going to cause the dollar to sell off quite strongly as well. All right, okay, so these are the key data to watch out for this week, right? Remember this, of course, there's plenty of other stuff that's being released as well, but I just wanted to highlight the Bank of Canada, right? The BOC meeting coming up on Wednesday, the ECB's monetary policy decision on Thursday, as well as employment data out of the US, right? We've got ADP on Wednesday and non-farm payrolls on Friday. All right, with that, now let's dive on over to the charts and trading view, and of course we'll start the analysis on the dollar index. Right, so looking at the dollar index here, I'm on the daily time frame, right? It closed at 104.62 last week, right? So you can see here it's last week as well, it sort of ran into resistance around this overlap level here as 105.125, right? There's a pretty nice overlap level here. Oh, actually, if I stretch it all the way back, you can see this is a pretty nice overlap level here. So I think, wait, hang on, let me just adjust this a little bit here. Perhaps I think there is a slightly closer, yes, there's a probably a better slightly more nearer resistance level that we can use, right? This is a nice overlap resistance here as well, previously at 38.2%, right? But that's been broken now, and the next resistance I see is coming in at 61.8, right? So previously this was a strong overlap resistance level here at about 105, but of course we can see slightly breaking above here. So right, although this may be an intermediate resistance level here as well, right? Take note that this could be a pretty decent intermediate resistance level around here as well. Right, and we have the main resistance coming up here at where the 61.8% sits, right? We can see that previously dollar index finding strong support here at 105.58 back on 23rd of April till 1st of May, and then after that proceeding to function as resistance on the 9th of May. We can see a nice like little swing high here and also a little bounce here as well, so creating a strong overlap level at 105.58, which is what we're using to identify as the first resistance, right? This major overlap here at 105.58 is a major overlap level, which is going to be used to identify it as the first resistance, and at the same time we have the Fibonacci retracement at 61.8%. Now looking at support, right, the dollar index, we see it find strong support here at at the level of 104 back on 25th of March till 10th of April, and after which we can see it finding nice support here just above this level again on 16th of May, right? We see a nice swing low bounce off this level again. So we see a nice pullback support level here that has the presence of a 61.8% Fibonacci retracement as well, right? So that's how the pivot level has been identified for this week. Right, so last Friday as well we had PCE data. The PCE price index is the Federal Reserve's preferred measure of inflation. So that overall data, headline CPI and core CPI came in line with estimates. So that also caused the dollar to sell off last Friday as well. So we saw the dollar sell off last Friday, and it could potentially continue falling as the new trading week begins. So that's why the pivot has been identified at 104 based on this pullback support levels, the 61.8% Fibonacci retracement, and also because with PCE coming in line with estimates last week, right? So we didn't see inflation accelerate in the US, so that could mean that we are likely to see dollar weakness gain further traction and causing dollar index to drift lower and fall towards the level of 104.10. Now looking at the first support for the dollar index, we see a pretty decent pullback support level here that occurred on what is this, 21st of March, right? It's a nice pullback support level that also has the presence of a 78.6% Fibonacci retracement. So that's how the first support has been identified at 103.24. Hi Ren, is it alright? Is it clear? Is the audio better now? Sorry. Just let me check. Right, okay, so with that, let's move on over to the euro. Of course, since we've got the ECB coming up this week, then we'll cover the pound, Aussie, and gold and silver as well. All right, okay, let's move on over to the euro now. With dollar index selling off last week, right? That's of course going to mean currency pairs like the euro is going to be supported as well. So for the euro, we see it make a nice support last Wednesday and Thursday at the level of 1.0799. Right, we also see it finding support here on Thursday and Friday, 23rd and 24th of May. Right, so this is a pretty decent pullback support level here, and we also have the presence of a 38.2% Fibonacci retracement. So that's how the first support has been identified for the euro. And I see this resistance level here, right? There's a nice pullback resistance level here where where the euro has run into resistance at around the region of 1.0900 at on 16th of May, right here, 20th, 28th of May, and as well as last Friday as well, 31st, right? And when you look across here, this level also has the presence of a 78.6% Fibonacci retracement, right? So we see a pretty decent pullback resistance level here where we can see the euro stalling at this level several times. So we're expecting it to rise up again and perhaps stall around here and make a small pullback before potentially resuming the uptrend. Right, then looking at resistance, right, we see that we have a resistance level, first resistance identified at 1.0948, which is like pretty significant swing high resistance here, right? We can see a nice swing high resistance that's occurred here on the 8th of March. So that's how the first resistance has been identified here. And right, support also has, we already talked about it, support also has the presence, right, of the 38.2% here. So for the euro, we're expecting it to push up, right? Once again, as the new week kicks off, remember, we're expecting dollar index to pull back. So if dollar index pull back towards 104, we're going to most likely find support here, stage a mini rebound. So that means euro, of course, is going to rise higher, perhaps run into 1.0900 here, pull back a little bit, and then continue the uptrend, right? Okay, now let's move on over to pound or cable. So similarly, of course, if you're expecting dollar index to fall and euro to rise, pound is also going to rise as well, right? So cable has run into resistance here, made a pullback resistance at 1.2800 on 21st of March, and making another pullback resistance level here on the 28th of May as well, right? So you can see the cable running to resistance at 1.2800 twice, right? 21st of March and then 28th of May, signaling a strong pullback resistance level where the pivot has been identified, right? We can also see that this is a pretty decent strong area here, resistance area here, coming up to as high as 1.2800, Now with regards to the first resistance at 1.2858, we see the cable running into stalling around this level here on the 8th of March, right? We can see also price making a nice swing high resistance here, and also coming as high as 1.2893, right? So there's a strong resistance here, swing high resistance for cable that occurred on 8th of March, which is going to be identified as the first resistance. Similarly for support, right, when we look across this price level here at about 1.2700, we see the cable making a small retracement here to the upside, running and then stalling around this level at 1.2682 and then falling. Then once again, after it broke out of this level, it found support here on around 20th of May, finding another support here on 23rd of May, and then once again on the 30th of May to bounce higher. So you can see how the euro has reacted here, running into resistance on second week of April, after which finding support here in the third and fourth week of May, right? So it's quite likely it's going to continue to rise higher now, cable, and perhaps stall around this region here, around the pivot, pull back, make a small pullback, find support, and maybe continue the uptrend as well. But for now, we expect the cable to start the new week rising up towards the pivot area here. Right, okay, so these are the key levels for cable. Perhaps I even see maybe a pretty decent ascending trend line as well, right? There's a pretty decent ascending trend line as well that we can use here, right? We can see cable bouncing off this trend line here in the second week of May, mid-May, and as well as here at the end of May as well. So pretty decent ascending trend line. Maybe that's even a bullish channel, right? Maybe we can even line this up as a bullish channel. Yeah, right, I think it's better as a bullish channel, right? We see a nice bullish channel as well, right? There we go. Let me just highlight it a little bit better. Right, so yeah, it's better to identify this as a channel as well. We see a nice bullish channel for cable, right? Do we see something similar for the euro? Not as clean, right? It's not as clean. If you look at it, the euro actually broke out of this bullish channel here, right? But it does look like it's going to continue higher here, right? So we see what was previously a bullish channel for the euro, right? It broke out of this level here, but find support. So it looks like it might climb back above this level once again, right? We might climb back above this level here again. So if we do see this here, we might see the euro break out, break higher and run into resistance around the pivot of 1.0900 here. So you can see previously the euro as well was trading in a nice bullish channel, but it broke out of it last Wednesday. But for the cable, we still see a line we still see the bullish channel very well intact. All right, then we also had a request for gold and silver, right? So great, let's move on over to gold, right? So the ticker symbol for gold is XAU USD, right? We can see here, this is the all-time high for gold, right? Running into resistance here 2,450. When you look at it on the monthly time frame, right, you can see, right, this is indeed, right, you can see this is indeed a very strong bullish move in gold here, right? Pulling back here in November of 2022 around 1,650, pulling back here again in September 1,840, and you can see it has broken out of a major resistance as well, right? This was previously a swing high resistance here in August 2020, another swing high resistance here in March 2022, and another swing high resistance here on May, right? You can see this was a very significant resistance level here. One time, two time, three times we saw gold prices test this level before finally breaking out here to go higher, right? So you can see this was a multi-swing high resistance here at around the level of 2041, where gold finally broke through earlier this year and has made a strong move to the upside, right? So you can see how strong this move has been for gold prices as well. Now let's go back over to the daily time frame. And coming back to the daily as well, you can see, right, another resistance level here. You can also see this was the previous all-time high for gold here, making a swing high resistance at about 2,430. and then now it's made a new swing high resistance at 2,450 here, right? So there's a very significant resistance area around here. Now with gold currently trading around, okay, right, so with gold currently closing at $2,327 per ounce last week, you can see it ran into resistance here in the middle of last week on Tuesday and Wednesday, and we can probably expect gold prices to pull back a little bit more as well. Now we see here this level, which is at 2,361. You can see gold prices finding a pretty decent pullback here, then running into resistance here on 13th of May. This pullback occurred 17th of April, 13th of May, and then making another pullback here on 28th, Tuesday, Wednesday, and Friday as well. So we see a pretty decent overlap level here at 2,361, where gold prices have stalled recently. So that's what we're using to identify as the first resistance. With pivot, right, we can see once again gold prices potentially falling down to this pivot here, pivot level at 2,285, right? You can see a nice swing low here that's taking place here, right? We see gold prices finding nice support around the region of $2,280 per ounce. So it's once again where if we still see gold prices pull back, quite likely going to find support here and then bounce higher. And we also have the presence of a 38.2% Fibonacci retracement, right? So we started this retracement from here, right? Started retracement from here, this low here on the 14th of April, and of course going up to the all-time high on the 20th of May, right? So that's how the pivot has been identified as a swing low support here. That also has the presence of a 38.2% Fibonacci retracement. Looking at the first support, right, first support is at $2,150 per ounce. We can see gold prices making a nice support level here on 12th of March till the 22nd, and then after that you can see it broke out here, found support, then finally went higher. And it also has the presence of a 61.8% Fibonacci retracement. And if you stretch it across here, right, you can see this is also actually a pretty decent overlap level here, because you see the resistance level here as well, the spike here that occurred on the 4th of December last year. And also I like just to point out, maybe there's a pretty decent intermediate level here as well, intermediate support level here, right? Pretty decent intermediate support level here. And if you stretch it across, it's also, you could say it is like a probably an overlap level here. So $2,327 $2,328 per ounce is a pretty decent overlap intermediate level here. And should this level give way, then it's quite likely gold prices are going to drop towards the pivot and find support here as well. So just take note of this overlap support level here at 2,328. It's a pretty decent intermediate support as well. So right, so we, in today's scenario, we're seeing a little bit of positive correlation between the dollar index and gold prices, right? Normally, remember, gold and the dollar index have a negative correlation. So that means if gold prices, if dollar index is falling, gold price is expected to rise, and vice versa. But over times, especially over the last few months as well, we have seen periods of positive correlation between dollar index and gold as well. So now if you do a comparison, right, we can go to compare the gold with dollar index. So you can see here, let's zoom in a little bit here. So you can see there's a bit of positive correlation here. So this is the performance of the dollar index. This is gold here. So remember, the orange line is dollar index. So we can see here when gold prices were rising, this was also a period where generally dollar index was rising as well. Then when gold prices were pulling back, we also saw dollar index pull back a little bit here. So we saw positive correlation here. Then we saw negative correlation come back. So that means we saw dollar index drop lower, right? We saw dollar index drop lower, but we saw gold prices rise higher again. And similarly, when we saw dollar index rising a little bit, we saw gold prices pull back. So we can see there's been periods of positive correlation here in April to May, right? For most parts of April, positive correlation. Then we saw negative correlation come back in again, right? So to take note, sometimes we can see positive correlation come in as well, right? We can see positive correlation between gold and dollar index take place as well. All right, we also had request for silver, so let's cover silver as well, right? So silver is XAGUSD, right? That's the ticker symbol here. So we can see that this let's just start with a clean canvas. We can see here it is in a strong bullish move as well. So precious metals as well have experienced a strong bullish move over the last few months as well. So looking at silver on a monthly time frame, right, we can see previously this was a major resistance level, right? So previously this was a major resistance level for silver here. It's not an overlap but a pretty decent resistance level here, right? You can see it making like a multi swing high resistance in August 2020, February 2021, and also June 2021, right? You can see major resistance here, and finally, although it did attempt to break out of this level here in April, we pulled back very sharply and then finally climbed higher as well. So you can see this was previously a very strong multi-swing high resistance for silver at around $28.13 per ounce. Now going down into the daily time frame, right? And if you zoom out, right, you can see very clearly swing high resistance here, swing high resistance, right? Three major multi-swing high resistance. And even here as well, after the breakout occurred, it sort of was a failed breakout. It moved back, then finally bounced higher as well, right? So you can see this is a very significant move here. Right. Now, of course, with this precious metal also trading around $30.38 per barrel here, per ounce, so we can see that this is a strong bullish move, and it's sort of ranging between about $30 and $32. So you can see this is a strong resistance level here, right? We also have another like multi-swing high resistance that's taken place here. So quite likely, also quite clearly, the first resistance is at $32.07, right? You can see when we zoom in, right? There's a multi-swing high resistance here and here. I also see a nice overlap support, right? This is a pretty decent overlap support level here, which is at $29.79. We're going to use this level to identify as the pivot. I see nice support over here as well. Right, then looking at the first major support, that could be this pullback support level here, right? We see previously silver running to resistance here, making a swing high resistance around here. Then we see it run into resistance here a little bit on 10th of May, which is at what level is this? This is $28.85. Pull it running to resistance here, pulling back, and then finally going higher. So you can see this is also a pretty decent pullback support level, and we can use this to identify as the first support. Right, we can also run a Fibonacci retracement. There's a couple of retracements we can run. You can run the first one from here, this swing low from 2nd of May going up to the high here on the 20th of May. Let's pull up all the fibs. Right, we can see that there's a 38.2% Fibonacci retracement that aligns close to the pivot, and we can also see that this pullback support level here has a 61.8% Fibonacci retracement underneath it as well. So let's keep 38 and 61%. Right, maybe there's another retracement that we can use as well. I think this time from here, let's see, 14th of Feb going up to the high. Is there any Fibonacci confluence that we can use? Right, we can see that the 38.2% retracement aligns very well with the 61 as well, so we have a Fibonacci confluence. Now Fibonacci confluence simply means you have more than one Fibonacci level at a particular price zone, right? So in this case we have the 61.8% and the 38.2%. Right, so we can expect so we can probably expect silver prices to pull back, right? We're also expecting gold to pull back as well. Remember, we're expecting gold to pull back, find support around the pivot here at $285 per ounce. So quite similarly, we can also expect silver to pull back as well and find support at this overlap level here. That's around the 38.2% Fibonacci retracement. Right, so we could see precious metals as a whole, silver and gold pull back over the next 1 or 2 days, then find support at their respective pivots, and then perhaps make a potential rebound as well. All right, hi, yeah. All right, okay, yeah, sure, we'll cover, let's do Bitcoin and we'll do US30. Okay, is there correlation? All right, okay, interesting point. I've not noticed it, if there is any correlation between US30 and Bitcoin, but that's pretty interesting. Let's take a look. All right, okay, let's take a look at that. Okay, so we'll start off at looking at US30 first. Right, okay, so just looking at it on the daily time frame. Here you can see this was previously the all-time high, right? This was the previous all-time high for US30, which is Dow Jones, right? This was here at about 40,023, and now of course the all-time high is at now at 40,095, right? This is a new all-time high here. We see previously running into swing high resistance here, finding support, double support, then running the resistance again and finding pullback support here as well. You can see this is a major support level here for Dow Jones at around 37,700. It's also made a nice pullback support level here at 38,000 as well. You can see a multi-swing high resistance here and here. Right, so before we get into the correlation between Bitcoin and US30, right, we can see here the Dow Jones found nice support on Thursday and Friday to stage a strong rebound, right? And we think that this rebound could continue. However, take note, I also see a nice ascending trend line here. There's a nice ascending trend line here, and we may have a bullish breakout take place this week, right? As a new trading week gets underway. We've seen US equity markets rebound quite strongly last Friday, and for the Dow or US30, we're quite likely to see it break above this descending trend line, triggering a bullish move towards the pivot level here at 39,300, which is where we can expect it to stall, make a little pullback, and then perhaps continue the uptrend as well, right? So we see this pivot level here is an overlap level where we see Dow running the resistance here on 23rd of February, then finding support here on 26th of March, running the resistance here again on 4th April, finding decent pullback support here on 14th May as well. Then you can see making a little resistance here as well. So you can see this is a pretty significant overlap level, right? This is a pretty significant overlap level here, and it also has the presence of the 61.8% Fibonacci retracement, right? We also have the Fibonacci retracement adding significance to this overlap level, which is what we're using to identify as the pivot. Right, so pivot is at 39,303, strong overlap level with the presence of the 61.8% Fibonacci retracement. We could see Dow Jones make this bullish breakout above this descending trend line, triggering a move up all the way up towards the pivot here. Quite clearly, first resistance is at around 40,056, close to the all-time high, and should we see a pullback occur after hitting the pivot, we are likely to see Dow find support at this pullback support level here. We can see it finding here we go. We see it making a small pullback here in February, here in early March as well. another support here, bounce on April, after which running into resistance here, and mid-April, and running into resistance again at the end of April as well. So you can see this is also another strong overlap level that we can use as a potential first support here as well for any pullbacks. All right, now let's see if there's any positive correlation, right, between US 30 and Bitcoin, right? It's something that I've not noticed, but let's see if there is indeed one. Right, okay. Okay, so the orange line is Bitcoin. The candles are US 30 or Dow Jones. Yeah, I guess you could say there does seem to be some positive correlation between the two, right? Maybe it's not the strongest level, but generally you can see Bitcoin has risen strongly, pulled back as well over here. So yes, there is some positive correlation. May not be the strongest positive correlation, but yeah, you can see it quite clearly, like from here, right? We see Bitcoin, oops, here we go, Bitcoin falling lower over this period, right? Similarly, we also see Dow Jones over the same period sort of dropping lower as well. And then when you see this oops, and when we see Bitcoin prices move higher here, right, we can also see Dow Jones moving up as well, right? So you can see, yeah, there is definitely some positive correlation that's going on, right? It's definitely more than 50% the positive correlation that's been going on between Bitcoin and US 30 since the 9th of April. Yeah, so you can see basically when it's risk on for equities, right? When US equities is risk on, we see crypto, or specifically Bitcoin, moving higher as well. And when we see is risk off for equities, risk off means equity markets are pulling back. We're also seeing crypto pull back as well. Yes, so definitely right. Great for calling that out. Yeah, great spot on that positive correlation between Bitcoin and US 30 as well. Right, okay, let's see if there's anything else. Right, hi Karim. Right, thanks Charlie. Yeah, thanks everyone. Thanks Charlie to remind everyone to click the like as well. All right, hi Karim. All right, here. Okay, for me, personal trading styles more of a swing style trading, right? So I look for major support and resistance levels and pivots, and then try and play the bounce off the resistance and support as well. So like for example here with maybe what's a good example would be right, let's go back. I believe it was the euro, right? So what would be a good example is for the euro as well. So as it was falling sharply last Wednesday and Thursday, right, after we saw Thursday here stabilize around a level of 1.0800, right? It's a pretty strong pullback support level here. Also saw the euro find support here as well previously 2 weeks ago. So as it found support here and started to move higher, right, seeing a support, then I'll be looking to play the bounce as well. So looking for instruments, whether it's a currency pair or the dollar index or the equity indices or even gold and oil, right, looking for price to react off major resistance and support levels, and then play that potential bearish reversal as it moves off resistance, and play potential bullish reversals as it bounces off support levels, right? So that's how I would what do you call it, yeah, that's how I describe my trading style as well. So longer term, slightly medium term swing trading, as well as intra-week swings as well. All right, okay, we still have time for the session, right? Okay, so let's move on over to oil, right? Let's cover WTI oil as well, and of course there's time for another one or two trade as well, right? Okay, analysis. Right. Okay, maybe we can cover dollar CAD as well, right? We'll cover dollar CAD since we've got the Bank of Canada meeting coming up this week, right? So let's take a look at dollar CAD, and then we can wrap up the session with WTI oil. Right. So looking at dollar CAD here, we can see that it's running to resistance at around 1.3718, right? 1.37 1.3730 here, running into resistance here on 23rd and 24th of May, 2 weeks ago, running the resistance once again last Thursday as well. And we also see that this pullback resistance level here has the presence of a 50% Fibonacci retracement, right? And we also saw dollar sell off last Thursday and Friday quite strongly. So that means dollar CAD has been pulling back. And where I see a nice swing low here, we can see a nice swing low bounce that occurred off the pivot at 1.3596 back on mid-May. So in mid-May, we saw dollar CAD make a nice swing low bounce off this level here, right? And that's what we're using to identify as a pivot. So dollar CAD has been pulling back since Thursday. It's quite likely to stabilize around the pivot here and perhaps potentially stage a mini rebound as well. Looking at the first support, which is 1.3519, right? This is a pretty decent pullback support here, where you can see price finding pullback support several times before moving higher. And also we see the presence of a 50% Fibonacci retracement at this level here as well, right? So it's a pretty decent pullback level here that's been in place since 22nd of March till 4th of April. Right, anything else to point out? Okay, so for Bank of Canada, they're expecting a rate cut, right? They're expecting to cut their let's see, from 5%. They're expecting to cut the overnight rate from 5% to 4.75%. So that means it's a 25 basis point cut or a quarter of a percentage point. So if they're going to cut, this is quite likely going to function as a near-term bearish catalyst for the loonie, right? The loonie is the Canadian dollar, so the Canadian dollar is going to sell off. Then we are quite likely to see dollar CAD stage a rebound as well. So if dollar CAD is trading around the pivot level come Wednesday, and we see that rate cut take place, we are quite likely to see a strong bullish reversal or bullish bounce for dollar CAD. And should that happen, it should potentially rise up towards 1.3700 as the first target, and then perhaps reach the first resistance where the 50% retracement also sits at. Alright, so take note, these are the key levels for dollar CAD and how the potential rate cut could impact the direction of this currency pair as well. Alright, then let's just wrap up the session with WTI oil. But before that as well, I would appreciate it if you guys could give your feedback with regards to today's webinar as well. I'm going to launch a poll very shortly. Just give me a sec while I set it up. Alright, truly appreciate it if all of you can give your feedback with regards to today's webinar, and we'll continue with WTI oil. Yeah, and remember to click on the like button as well. Alright, thanks guys. Alright, okay, let's wrap up today's session with the analysis on oil. So the instrument that we have is XTI USD. Alright, okay, great. Thanks everyone. Thanks everyone for the feedback. It's great. Right, okay, so we can see since May, right, since the second week of May, gold prices have, oil prices, specifically WTI oil, has sort of ranged approximately between $76.90 per barrel and about $81 per barrel, right? You can see sort of ranging between these two levels here since May, right? You can see it's sort of been ranging between these two levels here. So sideways trading, bouncing off $81 under resistance, and bouncing off the support here at $76.64. Right, first resistance has been identified as this overlap level here. We can see WTI oil making a nice pullback here in end of March, bouncing off several times before going higher. Then after that, you can see it's running into resistance here on 20th of May, then into resistance here on 29th of May, creating this overlap level here. And this is a nice overlap level here that has the presence of a 38.2% Fibonacci retracement as well. So that's how we've identified the first resistance for WTI oil, right? It's a significant overlap level that has the presence of a 38.2% Fibonacci retracement. Now looking at the pivot is a strong support as well. We can see crude bouncing off this level here on 15th of Feb, 20th of Feb, 26th of Feb as well. You can even argue here this was a nice bounce on 11th of March to go higher. Then as crude oil pulled back strongly, it found support here in early May, mid-May, the third week of May, and it looks like it's quite likely going to find support here as well, right? So this is a pretty strong pullback support level, right? It's a strong pullback support level at $76.53 per barrel, and it's also where the 61.8% Fibonacci retracement sits. So we see a nice strong 61.8% Fibonacci retracement level below here, adding significance to this pullback support. So we're quite likely to see crude prices, specifically WTI oil, find support around the pivot here at $76.53 per barrel and stage a nice mini rebound as well. Looking at support, of course, we see a nice pullback here or swing low that occurred here as well on 6th of February, where you can see this is a nice swing low support where crude oil has bounced off, right? This is also a nice pullback support level here that occurred in mid-Jan. So mid-Jan pullback, swing low in early Feb, and also this level has the presence of a 78.6% Fibonacci retracement as well. And you can see very clearly this is a strong pullback support level here, which is what we're going to use to identify as the first support at 72.31. All right, okay. Right, thank you very much, Charlie. Thank you very much. Truly appreciate it. Yeah, I mean, yeah, uh, yeah. I mean, I truly enjoy performing the analysis, right? Combining a bit of fundamental macroeconomic data together with the technical analysis, right? It helps us paint a more complete picture for each instrument that we're trading, right? Whether it's a currency pair, the dollar index, or the commodities like crude oil, gold, silver, and also looking at the indices as well, right? By marrying the fundamentals with the technicals, it really helps us to build a better picture and complete the analysis as well. All right, okay. I think we still got a little bit of time, so let's cover the US indices as well. Let's cover US 500. Right, perhaps let's look at it on the weekly basis first, before we move on into the lower time frame, to the daily. So you can see here previously for US 500, right? This instrument tracks the S&P 500 futures. You can see previously this is a bit of very strong move in equity market since October of 2023, right? This is a strong pullback support level here, and we've seen a very strong move up. So we see this is the previous all-time high, right? This is the previous all-time high here. Oh, sorry, the previous all-time high was here. Right, this was the previous all-time high back in January of 2022, and we see that level being taken out in Jan this year. Mid-Jan this year, we saw US equities stage a very strong rebound to break above its previous all-time high, and we see it raise up, making a new all-time high in April as well, then making a strong pullback for about 3 weeks before finally breaking above it to make a new all-time high at around 5,350, right? So you can see a very significant move in equity markets as well. Very strong bullish move. The bullish momentum is sort of still intact, right? When you look at it on a weekly basis, right, the chart is still pretty much intact. We still see a strong bullish uptrend as well. Now, looking at it on the daily time frame, right, quite clearly, this is the all-time high at 5,350 for US 500. And after staging a strong rebound last Friday, right, this pivot level here close to the all-time resistance is the pullback resistance at 5,326. So we could see equity markets perhaps stall around this level again, maybe make a slight pullback before resuming the uptrend. So if it does break above this pivot level here at 5,326, where the next resistance could come in is at this Fibonacci extension at 137%. Remember, US 500 has made an all-time high here on the 23rd of May. We have no other level to reference as a resistance. So in this scenario, what we do is we use a combination of Fibonacci tools. So in this case, we're using the Fibonacci extension at 137%. To find this extension, we run a retracement. So the retracement starts from here, 1st of April, going down to the swing low here on the 19th of April. Key extension levels sit at 127 and 161. So you can see that the 161% extension sits at about 5,500. So if we do see US 500 break higher, right, if it breaks above the first resistance, breaks above 5,400, then the next major resistance level could be identified by the extension at 161%. Right, there's also Fibonacci projection that we can use, right, to find this projection. We might need to go on the weekly time frame. Let me see. Right, for this projection, we might need to go to weekly time frame. So starting from here, point 1, 23rd of October, going up to point 2, April, and ending at point 3 at 15 April. Remember the key projection levels. Key projection levels are at 61% here. Okay, this is simply too far. Okay, let's not use it. Sorry, this projection is just simply too far. It's way, the 61.8 projection you can see is well above the extension at 161%, and you can see 78 and 100% here. So sorry, this is simply too far. These levels we do not need this projection for now. Is there anything else? No, probably just this extension is more than enough. Right, so these extension levels are more than enough to help us identify the potential resistance areas for US 500 here. Right, 161% is the next major is the next extension level that's helped us identify potential resistance at 5,500. We have the 127 extension to identify the resistance at 5,380. We have the all-time high at 5,350 as well. All right. Right, thank you very much, Roy. Thank you very much. Yeah, try to help to be quite, keep it clear and simple as well, right? Identify the major significant major resistance and support levels, identify what is likely going to happen based on technicals as well, and then combine it with the macroeconomic data for the week as well, because we know news releases are going to have a major impact on the direction of various currencies, commodities, and even the indices as well. Right, so before we wrap up today's session, here's the calendar for this week. Right, this is from Forex Factory. Take note, I'm on GMT time here, along with the Bank of Canada's rate announcement, overnight rate announcement, together with ECB's monetary policy statement as well. We've also got other data. Of course, we've got US labor data, the highly anticipated non-farm payrolls on Friday. Right, we're going to see unemployment rate, non-farm payrolls, hourly earnings. We're also going to see ADP data on Wednesday as well. Where's the ADP data? Here we go, ADP data here as well. Now let me just use my pen. Right, we've got ADP data here on Wednesday, non-farm payrolls here on Friday. Also got the ECB press conference. Remember, the press monetary policy statement will be released at 12:15 p.m. GMT time, and half an hour later, ECB President Christine Lagarde will deliver her press conference as well. So that's also going to be market moving for the euro. We've also got the Bank of Canada releasing its monetary policy statement at 1:45 p.m. We're going to see Tiff Macklem, the governor for Bank of Canada, deliver his press conference at 2:30 p.m. as well. And remember, we've also got ISM, manufacturing and services coming up as well this week. So pretty heavy calendar with quite a few things going on. And just wanted to highlight the re-acceleration in euro area CPI right after trending lower for most parts of the year. The recent flash CPI data for the month of May has shown a re-acceleration in both headline CPI and core CPI. Core CPI rising from 2.7% to 2.9%, and headline CPI rising from 2.4 to 2.6%. So looking at re-acceleration in inflation in the EU area, in the euro area, along with a nice rebound in economic activity as well, right? Remember, after the euro underwent technical recession in the second half of 2023, we have seen economic output rebound quite strongly in the first quarter. So when you look at this rebound in economic activity, together with the acceleration in inflation, we have to ask ourselves, is the ECB really going to cut, right? They could still end up cutting, right? But we've seen inflation reaccelerate and economic activity rebound as well. Is this enough to keep the ECB or to make the ECB maintain the rate at 4.5% once again? Remember, market estimates are expecting a rate cut, but we could see them hold as well, given that we have seen this uptick in inflation and a nice rebound in economic activity. So let's see whether they do move ahead with that rate cut. Okay, and then ADP as well, growing quite steadily, right? 12-month average for ADP growth is about 200,000. We've seen it sort of taper off last month for April was not bad, coming in at 192,000, quite close to the average. However, we are seeing the forecast for May drop a little bit lower. So we are seeing jobs still being added to the economy, US economy, but at a slightly lower rate. And then non-farm payrolls as well. 12-month average is about 242,000. We saw last month's figure of 175,000 for April, and we're seeing May's estimate coming in 185, so a little bit lower than the 12-month average of 242,000. So jobs are still being added to the US labor market, but at a slightly slower rate. What has ticked a little bit higher is unemployment rate, right? You can see unemployment rate was roughly between 3.4% and 3.7% for most parts of 2022 and 2023. However, in this year 2024, we've seen an uptick in inflation to come in at about unemployment rate at 3.9%. So this is a little bit it's something to take note of as well. If unemployment rate sits under 4%, that's probably fine, but if it starts to move above 4%, then that may signal some weakness in the US labor market, right? So any weakness in the US labor market is quite likely to bring the Fed closer to any potential rate cuts as well, right? So a weaker labor market, especially with rising unemployment rate and slower job growth, may be enough for the Fed to consider cutting its interest rate as well, right? Okay, so we'll wrap up with the ending disclaimer. All right, thanks everyone for tuning in to today's webinar. I hope this has been a great session for all of you. Do look out for all upcoming webinars for IC markets for the rest of this week. We've got education content as well as live analysis lined up as well as usual, so take note of that and do tune in to all upcoming webinars. All right, thanks everyone, have a great trading week, and I'll catch you all at the next webinar.